And welcome to the midweek edition of Business Morning. I'm Chimeze Obi Iwagu. We'll begin on the global oil market scene as prices rose this morning with Brent at $40 for the first time since March as optimism mounted that major producers will extend production cuts and a recovery from the coronavirus pandemic will spur fuel demand. Brent crude futures for August rose 43 cents at $40 a barrel. The contract climbed to as high as $40.42, the highest since March 6, after gaining 3.3% on Tuesday. U.S. West Texas Intermediate crude futures gained 68 cents at $37.49 a barrel. It rose to as much as $37.88, also the highest since March 6. The contract ended the previous session up 3.9%. Both benchmarks have risen sharply in recent weeks from the lows of April, buoyed by a continuing recovery in China, the epicenter of the virus outbreak, while other economies are slowly opening up after lockdowns to contain its spread. The Organization of the Petroleum Exporting Countries and other major producers, including Russia, a group known as OPEC Plus, may extend production cuts of 9.7 million barrels per day, or about 10% of global output, into July or August. The cuts are currently due to run through May and June, scaling back to a reduction of 7.7 million barrels per day from July to December. But Saudi Arabia has been pushing to keep the deeper cuts in place for longer. With the date of the meeting not yet set and some calling for it to be early as this week, much remains up in the air. But the demand picture is looking brighter as economies, including China, the world's second biggest oil consumer, start to recover from the pandemic. In the meantime, the Minister of State for Petroleum Resources, Mr. Timothy Silva, says Nigeria joins its other OPEC Plus counterparts in April 2020 to bring into effect the agreement to cut 9.7 million barrels per day that will correct the current situation caused by the COVID-19 pandemic. According to him, based on current data from the NNPC, Nigeria reduced its current production in May 2020 to 1.613 thousand barrels per day. The minister explains that Nigeria has made concerted efforts to adhere to the commitment and will continue to fully comply with the agreement. And the federal lawmakers have made slight adjustments to the parameters in the medium-term expenditure framework, which was submitted by President Muhammadu Buhari. The lawmakers raised the benchmark price for crude oil from $25 to $28 per barrel and reduced the oil production output from 1.9 to 1.8 million barrels per day. Meanwhile, the House of Representatives is calling for the scrapping of the excess crude account, describing it as illegal. During Tuesday's plenary, lawmakers has also adopted the report of its committee for the approval of President Muhammadu Buhari's loan request of $22.798 billion, which was initially stood down in March because it did not capture the entire region of the country. And the House of Representatives has rejected a motion seeking to suspend the implementation of the 7.5% value-added tax following the impacts of the COVID-19 pandemic. The motion sought to ask the federal government to suspend the additional 2.5% VAT contained in the 2019 Finance Act until January 1, 2021, while all businesses should henceforth hold the charging of VAT directly from the consuming public. While reacting to the motion, the lawmakers argued that since the 2.5% increase in VAT was already in the National Assembly Act, which has been signed into law, it cannot be suspended by a motion but through a formal amendment bill. And the World Bank Group has outlined immediate steps countries can take to speedily recover from the economic effects of the COVID-19 pandemic, which has dealt a devastating blow to the global economy. In its Global Economic Prospects report released yesterday, the president of the World Bank, David Malpass, explains that such steps include reforms that allow capital and labor to adjust relatively fast, reducing regulatory barriers and removing costly subsidies. He, however, warns that the damage already caused by the pandemic and lockdowns could push over 60 million people into extreme poverty this year. Okay, while the emergence of coronavirus has plunged the world into a broken supply chain, one industry that has its story to tell is the shipping industry. Now, the supply chain disruption is estimated to cost shipping industry about $350 million weekly and over $150 million for passenger and cargo air freight. Joining me now to give more insight on the impact of the COVID-19 on not just the global shipping industry, but Nigeria, is the Managing Director of River Lake, a Swiss shipbroking company, Mr. Bello Tuko. Thank you very much, Mr. Tuko, for joining us.
Thank you very much. Thanks for having me.
Well, shipping transports about 90% of global trade, so it's the most important means of getting goods in bulk from one place to another. So tell me, how much of impact has COVID-19 had on the shipping industry, particularly here in Nigeria?
Okay, so we've seen the global economy shrink. So a lot of the trade volumes have reduced drastically. So of course, that also impacted significantly on all the segments, from the tankers to dry bulk carriers, as well as the containers. In the short term, the tankers have seen a spike in rates, which of course was also due to the fallout of the OPEC plus countries. Now that we're beginning to see the effects of these cuts as the global economy is beginning to open, we're slowly seeing freight rates actually dropping. On the products shipments, as we have a lot of countries all under quarantine or lockdown, not many people are flying all over the world, so that has really impacted very negatively on movements of jet cargoes. On the containers, in the medium term, we expect to see Chinese backlog of shipments would probably help that container segment. So that should probably happen in the short to medium term. As regards to the dry bulk, the Cape sizes that moves a lot of the iron ore, mostly to Chinese steel companies, has been greatly affected, and the rates have really plunged.
Now, can you really put a figure to it? Can you quantify the losses, made by this industry as a result of this pandemic?
Well, the losses are quite significant. Currently, in Nigeria, for example, we have a lot of congestion in the terminals, but that's because not many goods are moving. That has really impacted a lot on terminal operators. Also, we have quite a lot of waiting time as most ships come into high impact areas, especially in the Mediterranean, like Italy and Spain, are sort of required to be quarantined for about 14 days before coming into port. So the impact has been quite significant.
Okay. Now, looking at these impact, and of course, I know that companies such as yours, shipping companies, must have lost quite a lot of money. What is insurance like? Is there any insurance compensation for losses resulting directly or indirectly as a result of COVID-19?
Well, I would say most of the losses will probably be due to most of the manufacturing companies who have sort of shut down. As regards to shipping itself, some order cancellations have been made, so we don't expect to see a lot of ships actually added to the order book this year. So in terms of the shipping outlook for this year, it's been reduced drastically, and we would see further reduction when the International Energy Agency outlook is also reforecasted for the rest of the year.
Yeah, you talked about quarantining some of the people entering for about 2 weeks. Yes, in late March, when about 6 COVID-19 cases were discovered in a particular vessel, the Nigerian government now imposed some kind of stringent measures on cargo traffic, allowing only vessels that have stayed there for about 2 weeks. Tell us about some of the measures that have been taken at the seaports in terms of safety, either by government or by the shipping companies, to actually ensure that cases of COVID-19 don't increase.
Well, so a lot of the shipping companies already have their safety measures that they operate on, because in 2014 we had the Ebola crisis across West Africa. So that sort of gave like a sort of idea of how to go about these pandemics. Most ships, like I said, that are coming from like high impact areas are required either at sea. You have to be at sea for a minimum of 14 days. But if you come into port and you have to report that you'd have no cases on board. And of course, we have the port health authorities as well who actually come on board in case there are any cases of the coronavirus on board the vessels.
Okay. Now, during the lockdown, the ports were allowed to operate, but that operation came with some kind of regulations. What was most challenging for shipping companies such as yours at this time?
Well, the major problem that we've encountered is mostly to do with delays. So, well, we'll see where that will probably take us because there might be a lot of cases as regards to ships that were delayed from coming in due to limited port activity. But of course, as you know, not many people were really doing any form of trade, so that was greatly impacted.
Now, in every bad situation, of course, there are opportunities. So what lessons did you learn from this COVID-19 pandemic? And are there some, wins for COVID-19, from COVID-19 for the shippers?
Well, those involved in the tankers, especially those on the crude, in the past month or so, we saw a spike in rates. But of course, that was very short term. In the medium term now, or long term, we're seeing those rates actually beginning to crash as a lot of the economies have moved, and also with the OPEC cuts now really coming into play. So we're beginning to see some sort of easing of activity across the globe.
So with this easing of activities across the globe and, of course, gradual coming back, to normalcy, but what is doing business like for you now?
Well, business has been it's been positive and negative, so it's been relatively okay. But then, of course, like we said, a lot of the impact we'll probably see in the next couple of weeks or couple of months. That will actually determine how the shipping industry is really going to look. But then, good thing is a lot of the order books this year we're not really expecting to see a lot of ships being built because a lot of the yards at the moment are not taking a lot of orders. Due to that, so hopefully, when the Chinese Chinese shipyards actually open, we might probably see some more orders for next year.
Now, as someone that has been in this business for years, are there steps to be taken for a shipping services company who perhaps wants to stay in business during this time?
A lot of them have had some sort of savings because the cost of bunkers now are a little bit less. So even in terms of rates, the way we look at this year, they'll still probably stay between break-even rates. So it's not been too bad for some segments. Of course, some of the other segments that have been greatly affected, like the offshore support industry, where they had a lot of contracts that were cancelled. So that will probably take a bit of time to recover.
So going forward, how can the shipping industry in general prepare for unexpected situations like this so they can avoid maximum business failure? Of course, nobody saw this COVID-19 coming.
Well, we don't really, that would depend on the global economy. So now...
But businesses would have to now, I'm sure a lot of businesses must have learned, from this situation that they have to prepare for the unexpected.
Correct. So at the moment, shipping already has a lot of safety systems that we normally operate on. So in terms of crew safety, that has always been top priority, so that has never been a problem. But in terms of commercially, in terms of earnings for ships, we would probably know that a little bit more towards the end of the year when we see the effect on the global economy. So that would actually determine what impact it will have on the entire shipping industry.
Okay, so what can you tell us about infrastructure development and revenue generation at Nigeria's seaports?
We have not really had major port development in Nigeria since probably the late 1970s and the early 80s. So that has sort of put a lot of pressure on a lot of our current infrastructure that we have.
And what do you think are the major challenges there?
Well, they've been, the government has did a port concession in 2006. Of course, that has had some sort of positive impact. But however, there's still a lot of areas where it's still government controlled, especially the areas of dredging and the areas of pilotage, which is still controlled by the government. So maybe there needs to be like a review of that port reform that actually happened, maybe to try and see if a lot of ports can go private to be able to drive a lot of investment.
All right, now importers have often complained about the demurrage being charged by shippers. Did that also apply during this COVID-19 pandemic lockdown? Or there was a standstill to it?
Oh, no, definitely not. For the ship owners, of course, because as whoever it is, whether you're a commodity trader or an oil trader who is responsible for your own trade, you are the one that determines which ports your ships go to. So in that case, whatever you've agreed on the contract has to be honored. However, I know the Nigerian Shippers Council advised that there won't be any demurrage payments for container stock in terminals. So that remains to be seen. But in terms of on the commercial ships, you have to pay those demurrage bills.
All right. Now, recently, the federal government has allowed other petroleum marketers to import petroleum products. So it's not only the NNPC now that have the monopoly to import petroleum products into the country. So what are the bright spots for shippers in this?
Well, NNPC is still pretty much strong in terms of imports, especially for the gasoline. On the gas oil and on the jet fuel, that's still controlled by other independent marketers who can actually bring in their products. Yes, shipping demand, if I look at our data, has been relatively steady, but of course at the peak of the lockdown, we saw a spike on rates, which was of course global. However, in Nigeria, it was mostly driven by actually the price of the oil at the time. So a lot of the marketers were looking to bring in these products so they could take position by the time the company starts to ease down the lockdown, so they can make hefty profits on the trade.
Okay, now, more trade, of course, equals more revenue. Nigeria's seaports, are relatively small for modern vessels, to load or discharge liquefied products and bulk cargoes. And Nigeria waterways are really, not deep enough for the navigation of ultra-modern vessels. What's your suggestion on how this can actually be tackled?
Well, we need to, like I said, we need to look at the port reform that was done 14 years ago. That needs to be revisited. A lot of some of the concessionaires that have actually invested quite a lot of money in terms of cargo handling equipment have not really seen massive benefits from their investment. There is definitely a need for dredging and removal of wrecks. So we have a lot of wrecks around the ports and the harbor area, which doesn't help navigation and doesn't make the ports very safe. So, of course, the Nigerian Ports Authority have taken a lot of steps in terms of removing the wrecks, but there's still a lot more to be done.
All right. Thank you very much, Mr. Tuko, for your time.
Thank you very much.
Bello Tuko is the Managing Director of River Lake Company, a Swiss shipbroking company. We'll take a quick break, and when we come back, experts push to improve reporting standards through integrated reporting. We'll learn more about this after the break. The Institute of Chartered Accountants is advocating for what may be termed a revolution in the corporate reporting landscape with what it called integrated thinking. Well, to help us with a better understanding of this new concept in reporting standard is the chairman of ICANN's Integrated Financial Reporting Council, Dr. Innocent Okosa. Thank you very much, Dr. Okosa, for joining us on the program.
Thank you, Chimeze, for inviting me.
So what is integrated reporting? What is it all about? And what's the aim? What does it seek to achieve?
Right. Integrated reporting aims to transform the corporate reporting landscape. Hitherto, we have a corporate reporting that is dominated by financial reporting, and what Nigeria has done is to adopt international financial reporting standards. And companies are enjoyed to prepare their financial reports, which then dominate corporate reporting. But from experience, we've come to see that what companies need to be talking about goes beyond financial reporting alone, because there are a whole gamut of other things that company needs to be telling their investors about.
Okay, so can you make it clear? I mean, what's the difference between this type of reporting and what we already have, the International Financial Reporting Standards 9?
Good. Yeah. So International Financial Reporting Standard concentrates on what we refer to as financial capital. But what the businesses and corporations are employing to create value, because integrated reporting talks about value creation. How does the organization create value? Financial capital is just one capital that organizations use to create value. But there are other capitals. So when you have a corporate reporting that is dominated by financial reporting, it only tells you about financial capital, then de-emphasizing the other capitals, which integrated reporting is now helping us to bring to the fore in corporate reporting.
How does this benefit listed companies and the investing public?
Good. So when you go to the capital market, one of the problems we have in the capital market is information problem. Information problem. We refer to that as Lemon's problem. And that is what arises where the managers of capital have more information than the owners of capital. So the owners of capital are the shareholders, whereas the managers of capital are the board and the top management. So they have more information on the what of the business. The owners who are dispersed, because the nature of modern corporation is that ownership is dispersed. It is not concentrated, and owners are not the one managing the business. So there's always information problem in the market. And this information problem will always lead to a breakdown in the capital market if owners are not well informed about the capital that the board and top management are managing. So what integrated reporting is now trying to do is to bring to the knowledge of the investors this other information that they need to know in order to improve the information problem. We call that information asymmetry in the market. So integrated reporting is going to help bridge the information asymmetry in the capital market.
So how much awareness has been created about this?
Yeah, at the international level, we have the International Integrated Reporting Council, which has done a lot of advocacy, sensitization, because with the people involved, International Federation of Accountants are involved. The corporate reporting regulators of all types, corporate governance like the Financial Reporting Council of UK, the ISB, the US SSB, the GRI. So there's a whole network of corporate reporting standard setters that are involved. And so that awareness is there at the global level. At the Africa level, the World Bank and PAFA, Pan-African Federation of Accountants, also came together to put up Africa Integrated Reporting Council also to create the awareness at the African level. In fact, they've taken it to the AU, African Union, trying to create awareness among the heads of state and how integrated reporting could be employed at least at African level. And the reason being that Africa is where most of the world's natural resources lie, and there is need for us to improve this reporting through integrated reporting. So that awareness is also there at the African level.
What about here in Nigeria?
So here in Nigeria, this is where the Institute of Chartered Accountants have done a great job because the Institute of Chartered Accountants led efforts to put into being the Nigeria Integrated Reporting Committee, which, of course, I am the chairman. And we have started engagement. In Nigeria Integrated Reporting Committee, we have membership of the Financial Reporting Council is a member, the Central Bank of Nigeria is a member, the NDIC is a member, the Securities and Exchange Commission, Nigerian Stock Exchange, even Association of National Accountants, ANAN, is a member. So we have also a global, and the Institute of Directors are also a member. So we have this influential community that we're building up in order to create the momentum and the awareness.
So in all of this, what is the take of the regulators, like the Securities and Exchange Commission, NICOM, NSC, as you said, and of course the Central Bank?
Good. So because those people you've mentioned are like sectorial regulators of corporate reporting in the industry. Then the Financial Reporting Council regulates financial reporting. And by bringing them in there, in Nigeria Integrated Reporting Committee, then we have the national awareness in Nigeria integrated reporting and integrated thinking.
So are they looking at adopting this system of reporting?
Yes, exactly. That's why Nigeria Integrated Reporting was created, to create the awareness and advocate and engage with these regulators so that corporations could begin, listed companies can begin to adopt Nigeria integrated thinking and integrated reporting when they engage in corporate reporting.
So when this concept is eventually adopted, what will change in the financial reporting standards of listed companies?
Good. So when integrated reporting is adopted, companies' corporate reporting, which today is represented by the annual report, will no longer be financial statement dominated. Because when we talk about corporate reporting, actually, there are other elements which are not, obvious or conspicuous here in Nigeria. For instance, if we talk about corporate reporting, it's made up of financial, it's made up of sustainability, or if I put it in a very broad way, financial and non-financial. So what is prominent in our reporting here is the financial. The non-financial is the one that is lacking. So when companies adopt integrated reporting, they will give also prominence to non-financial, because actually what happens is that it is non-financial that gives context to financial. If you report only on financial that sits within a context, you only see financial, but you won't see the context within which it sits. So integrated reporting will then make companies to show the context within which their financial sits.
So what's the connection between integrated reporting and corporate governance?
Great question. Recently, Financial Institution Training Center, FITC, and Financial Reporting Council did a webinar on this COVID-19 and the impact on corporate governance. And Dr. Oluokere, who happens to be the Director, Global Governance at World Bank, had to speak on this topic. And the simple advice he gave companies is that given this COVID-19, the board, which dictates corporate governance, will have to rethink corporate governance. How will the board communicate? And when the board thinks about how they are going to communicate, they will now know that they are not going to be communicating in the language of just financial. They'll be communicating to meet the need of stakeholders. And if you're going to communicate to meet the need of stakeholders, then you know you're going to go beyond financial. You'll be talking about financial and non-financial. Also, if you sit on the board of a company, and you want, because when we talk about corporate governance, it's about the system through which a company is directed and controlled, then you're going to be thinking about how does the business manage its capital. You're not going to be thinking about one capital. You're going to be thinking about the 6 capitals of integrated reporting. And that's why Dr. Olowokere was telling the board that they have to take advantage of integrated thinking and integrated reporting, which is being promoted by Nigeria Integrated Reporting Committee. And he made it clear, he advised the board of every company in Nigeria to think in that direction.
So how timely is this integrated reporting concept for the Africa Continental Free Trade area?
Good. When we think about how capital flows and how investment flows, then we'll see the connection with integrated reporting. Because actually the way it works is that capital will always flow to that environment where it is best utilized. But where it's best utilized will have to come through the information that is supplied to the capital providers. Capital providers being the ordinary shareholders or even the debt holders like bond holders. So what then happens is that if you look at South Africa, for instance, why South Africa is looked at as advanced in reporting is because South Africa has adopted integrated reporting. In fact, it happens to be the only country that has made it mandatory in their environment. And that is why even I went to one conference in UK, and I was surprised that people in UK were saying that, you know, you guys in South Africa, because we had one South African participant, and he was saying, you guys in South Africa are ahead of us in corporate reporting. And why are they ahead of them? Because South Africa has adopted integrated reporting. And so what it does is to make information more relevant for an investor who wants to trade across border.
Okay. Now, the timeline for achieving this integrated reporting, across Africa is 2016 to 2020. Now, given the current situation, we have a COVID-19 and all of that, is that still going to hold, or there would be a move?
Well, that's the plan of Africa Integrated Reporting Council when we held our inaugural meeting. Well, I'm a member of Africa Integrated Reporting Council. So when we held our inaugural meeting, we had a projection that this is what we want to achieve.
Well, a lot of projections
changed. Exactly. So exactly. So with COVID-19, a lot of things would have changed compared to what we wanted to do.
All right. I'm sure we will continue to follow up on this and see how this comes through here in Nigeria. Thank you very much, Dr. Kosa, for your time.
Thank you very much. All right, thank you very much.
All right, and just before we move to Temple, let's again go into the global oil market scene where prices rose this morning with Brent at $40 for the first time since March as optimism mounted that major producers will extend production cuts and a recovery from the coronavirus pandemic will spur fuel demand. Brent crude futures for August rose 43 cents at $40 a barrel. The contract climbed to as high as $40.42, the highest since March 6 after gaining 3.3% on Tuesday. U.S. West Texas Intermediate crude futures gained 68 cents at $37.49 a barrel. It rose to as much as $37.88, also the highest since March 6. The contract ended the previous session up 3.9%. Both benchmarks have risen sharply in recent weeks from the lows of April, buoyed by a continuing recovery in China, the epicenter of the virus outbreak, while other economies are slowly opening up after lockdowns to contain its spread. The Organization of the Petroleum Exporting Countries and other major producers, including Russia, a group known as OPEC Plus, may extend production cuts of 9.7 million barrels per day, or about 10% of global output, into July or August. The cuts are currently due to run through May and June, scaling back to a reduction of 7.7 million barrels per day from July to December. But Saudi Arabia has been pushing to keep the deeper cuts in place for longer. Okay, for Tuesday's market review, here is Temple Ashadu. Temple, it looks like the market is really following the trend of the global oil market, but I just wonder why the oil and gas stocks have not been moving.
The issue of deregulation continues to be a challenge to a lot of those oil marketing companies that are tradable on the Nigerian Stock Exchange. But when you look beyond that level and check what is going on upstream at the global center stage, where you have crude oil hovering around $39, $40 per barrel, I mean, it's something that will continue to fuel the confidence of a lot of investors, and that's why they're coming back to Nigeria. You see FPI still trading on equities, and you see a lot of the local banks, a lot of the local players increasing their interest in the equity space, because you remember, Chimeze, that there was a $25 per barrel benchmark in our budget, and that gives enough headroom for these folks when they want to exit the market in terms of repatriating their dividends in FX. But basically, yesterday we were positive, 27 basis points increase. That translates to some 47 billion naira in terms of gains that we saw added to the equity capitalization of the markets, bringing us to the volume of transactions, which is positive by some 29% in terms of volume yesterday. And of course, something like a cross dealing actually happened on Nigerian breweries, which is trading at 44 naira. We saw some 50 million units of this particular company's shares, exchanging hands yesterday, and that contributed the largest, as we haven't seen in a long time, to the volume of transactions here. The value of that 50 million units of shares of Nigerian breweries is at 2.2 billion naira. Now, if you price that into what we have here and take out just the 4-point-something billion naira that we have in total here, you then understand what Nigerian breweries added to the value of transactions in terms of activity yesterday. But if you look at the price of Nigerian breweries, there was basically no change. Deals that we had in the market yesterday, positive as well, 4,585. Now let's look at the banking segments, which of course saw some decline yesterday as opposed to what we saw the previous day. It's not surprising, because as an investor in the market, a time will come for you to take profit, or you reduce your holdings for one reason or the other in companies that you've actually invested in. And that was what played out in the banking stocks and, of course, the consumer goods segment of the market yesterday. Union Bank was down by more than 8% yesterday. Sterling Bank, which has actually seen some gains of more than 3% in the previous trading session, lost some 3% again yesterday. Axis Bank was also down by 1.8% or thereabouts. And of course, FCMB was down by 3.33%. Put all of that together, it translates to profits taken in the market. Look at the consumer goods side of things. In spite of the over 2 billion naira worth of transactions that we saw on Nigerian breweries, there was no change. It didn't contribute enough to what we saw in the sector. Instead, we saw some 9% losses on Champion Breweries and, of course, PZ. And, of course, if you're one of those investors buying Dangote Sugar, which has declared some impressive dividends at this point in time, and you're not waiting to cash out on the dividend, if you look at the capital appreciation, it has really, really increased. And that informed the 71 basis points decline that we saw on that side of the market yesterday. Industrial goods, thanks to Dangote Cement. And, of course, MTN was up by some 0.43% yesterday. Insurance segment of the market, insurance, we've seen ICO continues to blaze the trail. And, of course, Consolidated Hallmark yesterday moved very positively. But we have a stockbroker joining us to give us an insight, Mr. Rotimi Fakaijo. Thank you for joining us on the... Okay, we should come back to you after the break, Mr. Rotimi Fakaijo. Chimeze.
All right, Temple, before we get back to you to talk to Rotimi, let's do a quick call to London with Juliana Olayinka. Good morning, Juliana. Well, the impact of the COVID-19 pandemic on the travel industry is seriously felt by cruise operator Carnival and EasyJet as their share prices have collapsed. Do you see them losing their place in the FTSE 100 index as suggested by some reports?
Good morning, Chimney. Well, yes, that is the suggestion. Today is D-Day for FTSE 100 companies. Every quarter, the FTSE 100, which is the leading index of shares who are sharing or based in the UK, they do a reshuffle, and that's happening today. And at the close of business yesterday, it seems as if EasyJet and Carnival do not make the cut. To be part of the FTSE 100, you have to be one of the top listed in the 110th mark, and I believe EasyJet just falls below that. They've had a tumultuous couple of months, and so have Carnival. Since the pandemic started, Carnival have lost 70% of their market value, and that's because, if you remember, back at the beginning of the pandemic, there were so many cruises across the world that were literally just stranded at borders because there were so many infected patients on their boats, and they're not expected to start cruising again until October. EasyJet, similar story. They've grounded all of their planes. They've lost over half of their market value, even though they will be resuming flights sometime later this month. They've just announced that they'll be cutting about 4,500 jobs. So not great news, although some are expecting when the reshuffle starts again, EasyJet will be able to get themselves back on the FTSE 100, as they were just promoted to the FTSE 100 last December.
In the meantime, British Airways is in a bitter standoff with unions over sweeping proposals to restructure its business. What are crew concerns here?
Well, there are major concerns, and as most people know, BA have always had a pretty tumultuous relationship with union bosses. At the moment, Unite, which is what represents the cabin crew and baggage holders, they're actually not even talking to BA at the moment because they're so furious. And what Unite are suggesting is happening is that BA are planning on doing mass sacking across the board, and will be rehiring these staff at a much lower rate and with less great working conditions. BALPA are in talks with BA at the moment. BALPA are the union that represents a lot of the pilots, and they're also not happy. And it's really because of the way BA have handled their staff during the pandemic. At the moment, they are furloughing about 22,000 staff. Last month, they confirmed that they did plan on making redundant 12,500 staff. They're still in consultation, but it's believed that those staff members will be rehired at a later date. BA have always stuck to their position. They, of course, are feeling the effects of the tumultuous position that airliners are in. And they actually said this morning that they are burning through £1.3 million every day. And yeah, that's not a slip up. £1.3 million every day of their cash reserves. And this is the only way that they can survive. But of course, union reps are not happy, and they definitely want the government to intervene and not support BA if they're going to get away with treating staff so badly.
In another development, the U.S. has launched a formal investigation into new digital tax over concerns they unfairly target American tech giants like Facebook. The inquiry will examine tax schemes in 10 jurisdictions, including the UK, European Union, and India. What is the government's response to this?
Well, we haven't had a government response as of yet. And in fact, the digital services tax is already in place in the UK. It started on the 1st of April. And the government have said that it will provide the Treasury with about £500 million a year. And that's because they believe, as well as all these other countries, that a lot of these tech giants are using loopholes to stop them paying a certain amount of tax in these countries. Now, the problem is that most of the biggest tech companies in the world come from America, Silicon Valley, Facebook being one of them, of course, and Donald Trump is not happy about it. This spat has been ongoing for quite some time, definitely pre-COVID. And I suppose the biggest global trade tension was between America and France. As soon as France said that they were going to impose this digital tax, Donald Trump hit back and said that he'll start taxing the importation of French wines. Because of that head-on collision, Macron said that he will revisit it. But, you know, things have been silent during the pandemic as people have been focusing on domestic issues. But yes, recently Washington have now said that they will be investigating this further, and they'll be using a Section 301 probe, which is the same treatment that they use to imply tariffs on China and the US. So it'll be interesting to see how other countries respond to this. But at the moment, it seems as if everybody is definitely looking inward as they try to recover their economies, considering there's been such a long and lengthy shutdown.
All right, Juliana, we'll talk to you again later in the day for more update for developments there. Okay, let's get back to Temple. Of course, Temple, you were about to talk to Rotimi Fakayejo on some of those stock activities yesterday.
Absolutely. Mr. Rotimi Fakayejo is a stockbroker and a member of the Nigerian Stock Exchange. Thank you for joining us on the phone.
Hello.
Right. Good morning, Mr. Fakayejo. So we've seen a lot of gains in the market at this point in time, but just how cautious should investors who's got holdings in a lot of stocks, how cautious should they get at this point in time?
Well, I think it is very clear that the fundamentals of most of the companies, the very good ones, still remains the same. And for a lot of things, we don't have some industries that are very much affected, listed on the exchange. The banking sector, at least, they will pull through. The consumer goods, industrial goods. And I think we do not have much of the airline business listed on the exchange, except for one. And I believe strongly that with time, things definitely may get better because those ones are not, about two of them. But I think with the way it is, investors should actually watch it as it is and make sure that what they are buying is what will actually be able to guarantee them dividend return, even if price depreciates in time to come. So I think the caution still remains, but I don't think there is anything outrageous for investors to worry about.
Just before I let you go, you have 20-something seconds to answer this question, Mr. Fakayejo. Could you talk us through the backstory behind the rise in the price of NAMET? It's been up by more than 116% this year, when you compare to the opening price. What exactly is driving that performance?
Well, I think if you look at it strictly, the pharmaceutical sector definitely is going to benefit much from this COVID-19 pandemic. And I think the aftermath of it is going to spell a lot of good returns for them. So more business, more consumption of their products. So definitely you can envisage what will happen if with time to come, with respect to those companies, how their financials will look like. So I believe that the looking forward is actually what is making investors to take position in that stock. And I believe that it's definitely going to translate to a few others that is listed on the exchange in that particular sector.
A stockbroker and a member of the Nigerian Stock Exchange, Mr. Rotimi Fakayejo. Thank you so much for your insight. Well, we know that market has actually been doing well on the debt and currency side of the market as well. Things were not too bad because we have system liquidity of some 531 billion naira, and a lot of investors, local players, continue to dip hand into that and push to the bond side of the market, where we saw some compression of 2 basis points yesterday. And of course, T-bills, a bit of comeback. We got the 31st of May paper continuing to generate some interest, and OMO end of the market was not doing bad as well yesterday, Chimize.
Well, thank you, Temple. We'll look forward to a profitable trading day today, as always, Thank you, Temple.
Thank you.
Well, it's on that note that we draw the curtain on today's edition of the program. Thank you for watching. I'm Chimize Obi.